Check, 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 check. And we are live. Good morning, everyone. I hope you've had a good night's rest. We have a fun day ahead of us. I think what we'll be doing today is capturing some of what we've seen over the past week and hopefully finding a nice couple of trades this Friday. So let's head over to the charts and see what's going on today. So today we have a 9 a.m. Fed speaker, 10 a.m. preliminary U of M consumer sentiment. A little bit less. I don't know if this should be a red folder. There's some volatility, but oftentimes there's not that much. And then Fed speakers at 1:30 and 2 o'clock to round out the rest of the evening, in the afternoon. So, yeah, a couple of things there. I was going to see, wanted to see what was happening because yesterday on the community, I had targeted 18,345. That has my attention here. That happens to be right around the top side of this old new week opening gap, which also closes in the high of this wick. We just barely almost made it to the low of that, so I think we're going to make it to the high of that from a weekly perspective. And then I had also posted a poll yesterday with a hot take: what if dollar ends up failing here? Hey, what's up, Jay Whitway? How you doing, brother? Hope you're doing well. So I had posted a hot take. Maybe dollar fails and plummets, leading indices to new all-time highs. That'd be weird, right? Oh, looks like ICT has something new here. Is there something new here? Oh, maybe it was from before. All right, maybe it wasn't new. So it looks like it's pretty much people are thinking, more people are thinking that we're ripped for all-time highs than consolidate, then go lower first. So I thought that was interesting. So we have some sentiment there, and it does look like this rebound is quite interesting here. Now, this whole week has been quite on quite a tear. We take a look at this week. You can kind of see where we started this week, traveled lower, expanded Monday, Tuesday, Wednesday, Thursday, and now Friday. We're already in an expansion morning. So London expanded quite a bit. I am looking to see if we get a retrace within the day, at least into maybe this area. I like this buy side imbalance, sell side inefficiency on the 15-minute chart. Oops. That immediately jumps out. This potential mitigation block also immediately jumps out. So we'll see if that holds or not. I like the lower buy side imbalance there, though. We see that in all of Asia. Asia's low was never hit by London's low. London's kill zone retraced back into an optimal trade entry area and then headed higher. So what does that mean? Well, I get a sense of the range. Equilibrium would mean that we return back to at least 18,268. So that's if we continue higher today. There's no real reason why we shouldn't go tackle that old new week opening gap, but I do think that we need a bit more of a retrace before we can do that. Okay, so That's what we're looking at right now, and it does seem like there's a fairly large imbalance here. I would almost treat this segment down here to be a bit of an area that we won't revisit, but we also need to be cognizant that this area at this real point right there, we had users that went short there, and if they kept on holding through this imbalance, that would be a key area for them to buy back their shorts. Smart money wouldn't technically go back in until a little bit lower, so I would be curious to see if we respect this buy side imbalance and target that 345 or 340, 345. Around that area is an area that I deem of significant importance. I see a lot of confluence there. And then also 18320 on the way up there is also something that I'm looking at. So awesome. Thank you for drop frames. Connected here. Internet's disconnected. Hey, success for you. Morning, Johnny Knight from Australia. Good evening, success. Sorry, my internet's a little bit crappy. I don't have fiber, so I get disconnected every once in a while when OBS drops my frames. Haven't quite figured that out yet, but I'll keep trying to lower frames and do test runs to figure out the right streaming bitrate. But welcome. And we're going to take a look at a couple things today, but we see on the weekly that we've traded up once we closed above this order block here. We've traded up, but we also traded back down. So far, at least this week, we have not expanded towards this relative equal high, and indices have continued to rip. So in my mind, it hasn't been an easy week to try to figure out, because we do see this is quite an area of consolidation here. And on the monthly, it doesn't even look like we're considering go from a 4-hour perspective. We see that we do have this previous potential area of mitigation. So we've drawn that out over time there. And these, we can remove the rest of these. These are no longer salient. We've already gotten past them, so we can get rid of these. We can get rid of these on our charts. We have no more of those. We can see we've had sell side taken. And we weren't able to get down into this 4-hour. So I need to see if we get a reaction at that 18,320 level. Jay Whitway, my service or yours keeps buffering. It's mine. It's not your. For some reason, OBS in the beginning of streams, it likes to drop frames, and even my internet and router likes to drop frames too. Looks like everything's disconnected here. Okay. Looks like it just disconnected again on my actual data, so I'm gonna reconnect on the data here. I think it's a combination. So I think it's a combination of streaming data, data used on NinjaTrader, data used with TradingView, and that in general, I think, is causing us to have a little bit of issues here. So I hope that it usually pans out and corrects itself, but if not, maybe it's going to be one of those days that the stream decides to kick me off. I hope not, but yeah, that can be annoying sometimes. Let's let the data come back. It's loading again, so we'll give it a moment here. So today, given that we have, I'll use TradingView while NinjaTrader's loading up. So given that we have dollar that's kind of like moved back down into this monthly inversion fair value gap, you can kind of see that here. I like that it's closing above the midpoint here. Yes, we traded to the low, but this can be, if in this month we traded down to the low of that monthly and close higher, that still leads me to believe that dollar is heading towards this high on the monthly, or at least this rejection block up here. So that leads me to believe that we are still meant to head higher, that we are still likely to engage higher on dollar. So that would mean that on indices, I'm looking for opportunities for us to go short. Doesn't mean that we're going to go immediately short because dollar is prone to go high, but we will end up looking at things with that lens that we are in a premium, right? From this discount, this premium high to this premium low, we're in quite a bit of a discount. And especially from the weekly perspective, we're in a premium. And from a weekly perspective, from this high to this low, we are definitely in a premium. So if we take a look at this from a weekly perspective, we're closing in on the 70 to 79% area of optimal trade entry. So I'm keeping that in mind on the weekly perspective. And on the daily perspective, we can kind of see from this high to this low, we've already breached that 79% optimal trade entry perspective as well. So we're keeping this in mind that, hey, if it goes much further, then it's probable that it will continue to rise and target this old new week opening gap high and low. So, but if we start to see extreme rejection from here and displacement below this short-term low on the daily chart, then we'll know that we're in a bit of a retracement. We've hit optimal trade entry levels and are ready for dollar to go higher and indices to target low resistance liquidity runs. Raptiel, hi Johnny. ICT talks about a spring SMT divergence in indices where prices are going lower. What would constitute for you to change gears and don't expect that bearishness to play out? Thanks. Yep. So a couple of things. So I've mentioned before that there's a really, really important thing that I mentioned regarding the treasuries, right? So one key thing that is in the back of my mind that goes against the grain, and I'd be looking for May. The key thing is in the month of May, if we continue to see bullishness in the month of May, which happens to be a bearish month seasonally, one thing that got me in the back of my mind is that treasuries. So you have to follow economic data and the Fed and what they're doing, right? There's a tentative schedule for treasury buybacks starting May 28th going through July 23rd. This is liquidity support. So they can buy up to 2 billion and 500 million to 2 billion in purchases of treasuries. So that is adding liquidity to the market. Now, what happens? That means bond yields end up going lower, interest rates lower, right? And then the bond prices themselves will end up rising. And typically when bond prices rises, dollar goes lower with interest rates going lower, and stocks go higher as well. So this is why I've been considering that, hey, if we continue to see movement higher, that we could see a bullish May. If we see a bullish May, that means June and July are going to be extremely bullish within a calendar year. So seasonally, I understand that May is typically a bearish month. If it, for some reason, is not, that means there's a lot of buyers ready, a lot of institutions that are ready to prop this market up during an election year. So you have to take that into mind and take that into consideration. So I'm watching the month of May and seeing if this month eclipses the previous month of April. April is typically a bullish month. And look at what happened here, right? So they're contradicting each other right now from a seasonality perspective. And when that happens, especially during an election year, that is odd to me. So when we get into June, technically June's a consolidation month. But, you know, you've seen these previous months here. Let me go to a weekly chart. So back in 2023, we had March, April, we had May was bullish, June ended up being bullish, consolidation in July, August bearish, September, October. And it wasn't until November that we got the bullish run into December. And then, of course, January was supposed to be bearish, but it was bullish. February is bullish, it was bullish. March, we had consolidation, which we did. April was also supposed to be bullish. It was bearish. May currently was supposed to be bearish, but it's bullish. So we can kind of see that we've got inconsistencies with the seasonalities, the seasonal trends that occur on the longer time frames. So we and it's an election year, so we understand that we need to be able to understand that, hey, there's very good chance that the Fed wants to prop the market up for an election year. So maybe prices go against seasonality, Raptiel. I'm going to trade price action and see what we can find here. We'll still look for our technicals to line up. And until we see true evidence of core displacement lower, not just price trading lower to find an imbalance like we have on the weekly, but really like big true weekly displacement, kind of like over back here in December of 2022, January 2022, where we saw a short-term low on the, actually this was an intermediate term low, right? That short-term low, short-term low, short-term low, and we saw displacement below that intermediate term low. That's what I would be looking for on the weekly chart for me to go bearish. Until that happens, I'm still bullish. So each of these were short-term low, short-term low, short-term low, short-term low, short-term low, intermediate term low. So until we get below this weekly intermediate term low, I'm not really convinced that we have gone bearish in the macro perspective. Yo, what's up, Kurt? How you doing, buddy? You having a good morning? Hopefully you're having a good morning. All right, so 10 a.m. silver bullet is what's going to be the play today. Given our economic events, you're going to want to keep an eye out for any fair value gaps that occur. I'll be keeping an eye out to see if there's anything at 8:30 a.m. to lead up to that. Maybe 8:30 a.m. forms a order block. I'm expecting price to head lower first. There's nothing happening right now, though. There's really nothing happening right this moment. We are likely to head lower to head higher, in my opinion. Now, it is a Friday. Price can drop on Friday as well, but you saw the unemployment claims yesterday. We had more unemployment come into play, which is what the government wants, right? You want to see hiked interest rates. You want to see higher unemployment numbers, and you want to make sure that you're seeing the levers that the government and the Fed pulls. You want to see that that response. So this is exactly what the government wants. They want to see higher unemployment. And so what I'm thinking is you want to keep an eye out for not necessarily this one. I don't think that's a valid one, but I do believe that if you take a look at this in swing grade, that wick up there, you can see that this wick's high, low, midpoint, that midpoint there happens to also be at the same midpoint as this previous day's high. So 3 days ago is high, mitigation block. I think that that's right beneath our, and I can put this in between here too. You can see there's a fair value gap there as well. Yes, there is one below us, but you can see how the midpoint of this wick here, let me get rid of this here. You see the midpoint happens to line up exactly with a mitigation block here. So I would be looking for price to trade down into this fair value gap, break through equilibrium at the beginning of the day, and then head higher and target the new week opening gap and target 18,320 as well. So that's my target reference for today. I think we go lower to head higher, and then we have a TGIF trade once we hit the all-time high. Once we hit the high of the week again. Once we make one more new high of the week. So that's my thesis for today. And then, of course, if it breaks down from there, it breaks down. But other than that, we've had a fairly bullish few set of weeks. So with dollar where it's at, we haven't seen evidence of dollar heading lower yet. So we assume that we will continue on the bullish trend. So keep your eyes out for this one. It would be stronger if we had a response here, and we are bullish. It would be stronger if we stopped right at that mitigation block and then headed higher. I don't want it to necessarily go down into this area, but that could be optimal trade entry alongside a bullish order block within a range that we're currently in. I still am not lost on the fact that we're in a premium segment of the weekly, though. So longs can be stopped out, but I think there's some unfinished business. It's already gotten to within a few ticks of the previous new week opening gap to be referred to. So I think that it's going to head up that way. And I see some confluence on some of my other charts on price action models that allude to 18,320, possibly 18,345. So lots of confluences in that direction that haven't been taken yet. We saw the response at this volume imbalance on the daily as well. We saw that we dropped below, picked up more orders, but closed in the midpoint there. And we respected the midpoint of that volume imbalance pretty much. So with that, I think that we're going to end up targeting this high, possibly the 18,568 high, and eventually 18,708. We'll see. I will be looking for a point to do that full port Friday. I'm going to trade some of the other accounts as well, of course. We did get approved for that $500 request payout, so that was really nice. So I'm waiting for that to get sent through, but looks like Apex was good with all of my evidence, so I'm glad to have that payout coming through. I'm going to be taking minimum payouts unless I have some crazy windfall, like some crazy really, really good profit targets, and we get lots of green in the coming month. But little by little, I want to make sure the account grows. I want to make sure that we continue to stack cash in it. and that we are finding good plays, looking for good points in the week to find good plays and trade well, right? Is there a need for us in this week? Is there a need for us to head any higher? Not especially. This week has gone from here to here. So if we don't go any higher, 18,241 would be the first area of retracement for us to head down to, which would put us to like right around here. I don't think the high is in yet for the week. I think that there's a little bit more. The high of this week is something that I think we potentially could target. But we'll see. We'll keep this on the 4-hour chart so we can get a little bit more data here. You can see that there's a sell side imbalance up here as well. So there's liquidity resting above this old new week opening gap, followed by additional fair value gaps above it. So whenever there's a fair value gap above a buy side area of liquidity that we might reach to, that is what I would target next. There's 2 fair value gaps up there on the 4-hour chart. You can't really see it on the daily chart, but on the 4-hour chart, you can see that there's liquidity there. There's outstanding liquidity here, 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 and here on the upside, which makes the all-time high as well. So lots of people here that went short. They're getting creamed, right? But I don't expect us to go straight shot up into this area. I expect this to be high resistance. This is not low resistance liquidity area, right? So I expect that to be high resistance. And if we think about what we see in the coming weeks, so let's say next week we have core PPI and CPI unemployment claims. Following week, I won't be here a lot of this week. I'm actually traveling, but we got unemployment claims, FOMC minutes, and the Treasury currency report. And then at the end of May, you have additional unemployment claims, pending home sales, and core PCE. So those are all PCE is personal consumption expenditures, and that's what price people pay, what price the average consumer, you and I, what we pay. All right. So given today's preparation is going to lead to the 10 a.m. silver bullet, you know what I'm looking for. You know what I'm searching for. These two, I want to see this one open and remain open if possible. Yes, it is a buy side imbalance, but I want to see that remain open if at all possible, because then I could leverage this as a mitigation block, and mitigation blocks are the first thing that you look for when price heads lower into a discount. First discount, then mitigation block. If the mitigation block fails, then you look for a breaker, you know, high, low, higher, high, or actually it should be a bearish breaker if anything, but, or sorry, a bullish breaker if anything, but it would be within this area. You can kind of see, maybe I can see it better on the 5-minute time frame, but you can see how there's a low, high, lower, low, and all within this segment of space here, right? It's probably easier to see it on a 1-minute time frame. So you kind of see this low, high, lower, low. So you have this whole candle here. This whole candle here, you have this as a potential, the highest candle before it breaks. So this one here, you have this as well as being a bullish breaker. So this is something of interest as well that would lead to yet another confluence for taking price. And I just need to fix that real quick. Taking price down to a certain level. So first thing I'll be looking for, of course, is the mitigation block. Do we head down to that mitigation block first, and I think we will. Then if it fails there, I'll be looking for it to react at this bullish breaker. If that fails, we have this fair value gap beneath us. And if that fails, we have, of course, this bullish order block that we would put right in that segment there, this bullish order block here. We would consider these two, because there's two of them here, that happens to be in that bullish breaker as well. So we'll consider that as well. If for some reason those fail, if for some reason those fail, this mitigation block would be my absolute lowest. Or sorry, this rejection block here at the lows here would be my next lowest target. And then, of course, this short-term low here. So we're starting to see a little bit more juice to that downside. I'm not taking a trade until I see us travel down to those areas, right? Kurt, congrats on the payout. Thank you. Thank you. I hope to see all of you get your payouts as well. Slow and steady and consistency and adherence to discipline is really it. For the full port though, I'm probably going to wait. I don't want to immediately take a reaction off of this mitigation block because there's this breaker, because there's this bullish order block here alongside that breaker, alongside an optimal trade entry, alongside another fair value gap on the 15-minute chart. This is that liquidity. This is liquidity is what I'm looking for. This rejection blocks the rejection block I was mentioning earlier, and of course the short-term low. All of those price could trade all the way down to. So you have to be really careful at where we're at in a premium, right? This doesn't really count as a bullish order block being in so high of a premium, but within this dealing range, it's still considered a bullish order block. But if we fail there, then we would have succeeded in reaching this area of consolidation. And I kind of treat this as an area of original consolidation. First stage distribution, second stage distribution, terminus. And then smart money reversal, return back to the original consolidation for the first side of the second leg of the market maker buy model. We see us return back to second stage accumulation, reaccumulation, back to an area of original consolidation, and then traveled third stage accumulation, and then back to this original consolidation here. So not much higher, but I do think we have just a little bit higher. It is more dangerous to be taking longs in this high of a premium. Just want to state that as a fact right now. So don't let me outlining a bullish trade take you away from analyzing the possibility of dollar heading higher and giving you a bearish trade either. So if you're bearish, if you're looking for bearish sentiment and bearish movement at the end of a week on a Friday, you are 9 times probably out of 10 you're gonna be right, in my opinion. There's nothing here that gives me high probability vibes yet. I mean, yes, we traded to this high here, 18,278. What's the low on this? 18,287.75, right? Versus 18,278. So we were close, about 10 handles away from that. Very, very close though. 278. 278.50. Sorry, 278.50. Sorry, read that wrong. So we barely mitigated on that, but that's not a discount enough for me, in my opinion. But if we are extremely bullish, we may not go all the way down to a 50% retracement. I think Michael had mentioned that before. There, when we're really close to a target here, this new week opening gap is my target. So if we see displacement higher, I might end up taking. I'm looking for that displacement higher to target the highs post London, and I might as well mark that. I'm gonna get rid of this fib here because it's distracting. I'm gonna mark this buy side liquidity, right? Let's mark this buy side liquidity. Draw that out over time. Draw this one out over time too. So we have our targets here. We'll look for evidence of displacement higher. So this is a optimal trade entry model combined with a search for entry tools on a combination of bullish order block alongside fair value gap, buy side imbalance. Okay. If you have a 30-minute chart, you're gonna be able to see that 30-minute bullish order block easier there. So you'll be able to see that a little bit easier. Hey Clarity, good morning. Good morning. How have you been? Been well? Hopefully you've been well. And hopefully you have had a solid time trading. Hopefully you've had fruitful time trading. Let me check something here. What is this value here? It's back from Friday, March 8th. Friday, March 8th. It was back here. Huh. So I'm checking something out from historic sense. I'm looking to see if there was a old new week opening gap that I'm missing here. Eighth, 10th. Oh, okay. Clarity doing well. How are you? I'm doing well. Just requested for the first payout, so that should be rising. Should get 500 in the bank soon. And we'll just continue building little by little. I want to like emphasize how seemingly painstakingly slow this is, because I don't want people to think that when you join these prop firms that it's all fun and games. Like, it's really, you need to stay consistent first, and then you'll be able to hopefully take more and more payouts over time. For somebody that works 9 to 5 like myself, who has meetings all day, you can't, I can't trade during prime time sometimes, and I'll miss trades oftentimes too. So for somebody like me, I like showing that it's taken months to get to here, because I can only trade 2 times a week, 3 times a week if I'm lucky. Oh, thank you, Clarity. Congrats on the payout. I'm slowly getting there. Yes. And you saw like every single time I was risking maybe 2%, sometimes 4% if it was a really good trade, but I was able to minimize my losses. I think is really the biggest lesson there is I was able to minimize my losses and follow truly good risk management. That's what really kept me in the game long enough to get to that first small account payout. When you have larger accounts and you have larger drawdown limits, it becomes a lot easier for you to use a little bit higher, same percentage risk, but the dollar amount looks different. So it becomes easier to do that when you have a larger account. So I was really happy to be able to do these on the lower accounts and the small accounts because that's always been an issue for me is being unable to build small accounts as easily as well because the dollar amount felt like it wasn't enough, right? So it was a really good training exercise. I was forcing myself to go through, stay with these small accounts, stay with the 1, 2 to 4% risk, and making sure that I was able to keep these accounts alive long enough, right? Um, that's really it. How do I keep these alive? So let me show you. I'll take a screenshot of my Apex. Just so that I'm gonna black out some things. Whoops. Oh, that was not what I was wanting, but I want to black these out because I don't want you to have to focus on anything that like it doesn't matter how many accounts you have as long as you get consistent at some point. So I'm gonna dark these out so you can focus and highlight. I'm gonna highlight the key things that are salient that I think is most important. So this, and I'm going to pull this over as well. Okay, cool. So I'm going to pull this over so you can get a sense, you as the watchers and folks that are on the channel, I'm sure many of you are wondering, you know, what's happening with the performance accounts, right? So here, let me go through. While there's nothing happening in price right now, we can see that. So I think this would be a good time to show you. So this days traded, I think this is something that any new aspiring trader needs to really pay attention to because this 50K account was the one that I took a $500 payout request from. And notice that we traded for 20 days, 20 different trading days. So if you think about it, if you do the math there, 27.85 divided by 20 trading days, that amounts to an average of 140 bucks a day. And yes, I had days where I made a lot more. It's just, you know, some days I made less. It's just some days I made more, some days I made less. But this is, you know, 5, 10, 15, 20 trading days. If you're able to trade each day per month, that's what comes out to be, right? It wasn't a lot each day, but it was good risk management, right? Hey, Maycells, good morning, good morning. It is a beautiful Friday indeed. Nothing's happening in the charts right now, so we're waiting until 8:30 a.m. So I'm giving a for the newcomers who are new to Apex Trader Funding, you don't have to make 500,000 bucks a day to try to make these payouts. You need to get slow, consistent, incremental trades, right? You need to be good with staying consistent. That is really key. So for the current time, even in the past month or two or three, you can see this has taken me quite some time, right? Now, the larger accounts, I can afford to risk a little bit more, and you can see I'm in drawdown on this one. I've actually been trying to get this one out of drawdown. This was a very poor set of decisions. Fortunately, I did not completely blow this account, but I'm slowly making my way back up on that one. Really disciplined, really low risk, making sure that I don't have this happen again. And of course, some new 50K accounts. So it was what, like, people say, oh, I've got, 600, 750,000 in funding. This part doesn't matter. Yeah, I can say I've got 750K in funding, but this doesn't matter. This, if you see people shilling, like, I've got 1 million in funded accounts, like, that's just that doesn't mean squat, because what you really have is this trailing drawdown is really what you need to constantly be monitoring, right? This trailing drawdown is your stop. That's the size of your account. So on a 50K account, I have 2,500 as a trailing drawdown. 150K account, I've got $5,000 in drawdown, right? So that's really what's key. And when you think about prop firms, you need to be thinking about risk in relation to your trailing drawdown. So if I have 2,500 in trailing drawdown, if I want to risk 2%, I can risk $50 per trade. $50 to make what? 139, 50, 100, 150 would be 1R to 3R, right? All right, so we're seeing price head lower in the background. Let me get rid of this. Hopefully that was helpful. Maycells, amen. Just scalped 300 on that model 2022 on the 1 minute NASDAQ. Good. That's awesome. Let me see. I didn't see a model 2022, but if you saw it, then great. I'm done for the day. Locked myself out of the funded account, so I don't do anything stupid. Good. That's yeah. You want to. The more that you train your brain to say, hey, I've had a green day. This is what I was looking for. The trade, it panned out in my favor. This is exactly what I wanted. I'm going to stop this day on green. The more green days you can gather there on good technicals, on good analysis, the better. That's going to help train your consistency to say, hey, I didn't go from a green day to a red day, right? So that's awesome, man. That's really awesome that you got your profit, took it, and you're done. That's really mature. Maycells, especially when it's live and I can take it payout. Yep. Exactly. Make sure you take your payout first, and then from there, you've already covered the account costs, so you can then continue to trade. Maycells, I have 2 50K funded accounts passed. I've been trading on one since yesterday, up 972. Wow. That's incredible. That's good that's awesome that you're trading those. Sounds like you're using a little bit of risk, but if you're okay with that, then by all means. If it works for you, it works for you, right? I hope you keep those accounts live, and I hope you can continue to build those accounts over time. Let's see, 707 candle on the 1 minute sweep of liquidity on the buy stops due to swing. I see. So you took that kind of a sweep of buy side liquidity there. Yeah, I see that. I don't see a 2022 model, but I do see the swept buy side liquidity. I see the drop down, return back to almost a volume imbalance on the 1 minute. Return to the short-term premium before taking sell side. Yeah, I see that. Okay, very nice. Very, very nice move there. I like it. Just for my sake, though, I will Keep this mitigation block there for visual purposes, so that we can see that mitigation block is still there. Okay, cool. 4-hour chart isn't going to move drastically, but I do want to keep this here so that we can see this that's outstanding to the buy side. There's no guarantee again that we make it to this new week opening gap, but usually we would get there. Yeah. What's my description of a model 2022? So I would, in a model 2022, I guess it depends on what time frame you're looking at, because on the 1 minute time frame, I would have looked for something that is a key high that got taken out here. Like, let me see if I can find an example. Let's see. Probably 4 hours is gonna be a little bit more difficult to find one on. Let me check on the 15-minute, might be easier. It's specifically on time of day and has to take out a key area of liquidity as well. So I think yours is valid, but I trust on the very least, at the very least, I look for 15-minute draws on liquidity to be taken out first. So there aren't a lot of great examples here. Oops. So this liquidity was never taken out. It's usually a time of day. So let me look and see on this one. Let me take yesterday as an example. So yesterday, we see that they had this 715 low, right? Let's mark that. So 15-minute short-term low before a key point in time, 9:30 a.m. We see at 9:30 a.m., specifically time, then price, right? We travel down here, and let's take a look on a lower time frame then on what we have on 5-minute chart. We'll look back to that day. So on a 5-minute chart, we see we traded below this short-term low, and we failed to make it down to this one. We see short-term relative equal lows taken. Precedence is set on relative equal lows, not short-term lows. So key at least 15-minute, at least this 15-minute short-term low, which also happened to be a 5-minute relative equal low, that got taken here. So, and you can kind of see how this is a lower short-term low. It would have been nice for it to take this as well, but we see displacement here. We don't see back displacement above a short-term high, though. It's kind of key, right? So we saw displacement here. Once we see that displacement, a return to this fair value gap is all that's needed for 2022 model. Now let's take a look at the lower time frame, though, on that. All right, so this is the same thing here, right? What do we have on the 1 minute? Short-term high. These short-term lows, relative equal lows, at 9:30, we see this move, breaks that. Displacement above this short-term high. So now we see, where's the fair value gap here? It's here. This can be served as one as well, but this is the fair value gap that we return to. That is what I would consider to be 2022 model, because then you maximize from 18,130 all the way to buy side liquidity, 18,210, 211. Even this would be 18,187 would be a valid area to take profit. That is what gives you the lion's share of that type of a move. There's no guarantee you'll see that on the 1 minute often, but it has to if you go back and study the 2022 model, you'll see these rules as part of it. So, but as long as you see the trade, your trade here, this, while it was at 7 o'clock, I think that Maycells, I think that this you could consider this on a micro time frame, because you do see that this relative equal high got taken, turtle soup, lower, back up into volume imbalance here, breakdown, target from 292 down to 281, so about 10 handles of profit there. I think that's reasonable. I don't see anything wrong with it, just I didn't see enough of it's too high resistance of a run for me to feel comfortable taking a risk off play there. When I do see that, I do think that we're heading lower to head higher. I want to see us break through this downwards at 8:30, or rise upwards and then go lower at 9:30 in order to head higher and then head lower. So swing high is technically buy stops on a low. Yeah. So this dealing range here, we kept on making, so this high to every new low that got taken and that got created is a new dealing range. So we see that this high took out this high here, so now that's the high of the dealing range, and this low got taken out by this low. So at the time, we had that be our dealing range, right? And then what happened? That low got taken out here. So now we have optimal trade entry, but this dealing range, this high is still a key high in my opinion. I was not looking at this as another key high. If you go to the low enough time frames, though, you can certainly treat this as if it's a lower time frame high. I personally find better consistency when I look at 15-minute highs and lows taken out. You can use the lower time frames for sure. But the way I would have seen that would be an optimal trade entry run on relative equal highs. There's nothing really here for me to consider this to be a major high. I personally just can't see that as well as maybe you can. So that's good. If you see that as part of your model, that's totally okay. It's just not part of my model. So I wasn't willing to take that. But I do see optimal trade entry returns to that. Turtle soup heads lower. You can creates a fair value gap. New dealing range here now. Doesn't reach and actually another one, since this took out the high. So now you have a new dealing range, micro dealing range. And you can kind of see that it trades almost up to equilibrium there, and then sells off after hitting this volume imbalance. Doesn't go up to this volume imbalance here, but possibly could have. So while I do see those trades, they're not ones that my eyes trained to see yet. So if your eyes are able to see those, then by all means take them. Take that cash out, Maycells. I want to see you become the next ICT. Let's see. So this whole like type of movement is not something that aligns with my higher time frame expectations here. I like this. I like a return to the lower mitigation block. I don't like this one necessarily, but I like a return to the lower ones first, because that allows me to then say, hey, I'm going back down to a discount in this segment of price. I see that London traded higher, retraced, traded higher, retraced, and then I want to see maybe one more run up into this 1820 area. I see this as being a area of interest. And then, of course, the high of this old new week opening gap as well. So I do think we're going to at least maybe head like up to that area at the very least. But let's see. Fridays have proven me wrong before. All right, so now I'm seeing a shift in this change in state of delivery here on the 1 minute chart. I'm seeing that lows aren't being taken. We're 7 minutes till 8:30. I think that we see you see how like this low, we kept on creating lower low, lower high, lower low, lower high, higher low, displacement higher, higher high, price moves into that, creates another fair value gap here. So I want to say we're going to end up starting to potentially run towards this area here, but I can make the case for both sides now. So, and it's not enough of a discount for me, although this mitigation block was very interesting and it did react roughly at that mitigation block. But it's not the right time of day, right? 8:24. So if we see a big run up before 8:30, before 9:30, or more importantly, before 9:30, then I imagine we'll end up going for that new week opening gap. Need to get prepared for my workday itself. While we wait for price action to occur. Yeah, I agree. I also had a draw on the 15-minute imbalance with the Wicks consequent encroachment. Nice, nice. Yeah, that can be treated as a gap. Okay. So now we're seeing a little bit more growth towards that. We'll see, because there's a tiny fair value gap down here. So I want to see if it returns to this buy side imbalance first before heading higher, or if it doesn't. Plugged in here. All right, so it looks like it's going to run for this high here now in advance of 8:30 a.m., but let's see. All right, so we have the midpoint of this wick. We see it rejected here. So nice little run up here. Now we see that fair value gap would be a move down below 50% of that run. No guarantees that it will bounce here, but it does seem like there's a shift in the state of delivery at this very moment. So I would like to see price trade down to this fair value gap before entering long. Yes, very possible on the lower time frames, but we're watching these on slightly higher time frames here. So when we see this down close candle, could just flat out turn into mitigation, and it could definitely run away from us. But there's no doubt that we're going to hit these levels and possibly even my swing projection levels higher. 18,295 was already hit. That was one of my levels from the other day. 320, 18,320, 18,345. There's actually a couple of higher level confluences that I see as well. But they're less together than the ones that I had pointed out earlier. So I like I do see some confluences up near the 6470 area, but that's a little too high for me for a Friday. I like the target of 18,345, 18,320. I like those targets. 18,345 particularly is interesting. So we're seeing some movement here. Let's wait and see what 8:30 a.m. brings. If we get a retracement or if it just runs for these highs here. It looks like it's going to treat that as a bullish order block potentially, or a propulsion block of some sorts. Let's see what happens here. So sell side, buy side liquidity just got taken out again. There. This is likely going to run for this high. Not going to lie, I don't think it's going to give us a full 50% retracement. Kind of like it didn't give us one here either. But, oh, there we go. There's, okay. So we have a little bit of movement. Sell side, immediate sell side got taken there, right? Buy side got taken, so watch for a move back down into this area next if we can. Doesn't have to, but let's see if this 8:30 a.m. gives us that move back down into buy side, or if it just continues higher. So we took out sell side there. It looks like people are willing to continue buying this up. Some people selling. All right, so that's good. We want to see us head lower. And there's watch out here. Don't necessarily wait for this just to go long by itself. We need to see. I need to see if it heads down into that and then doesn't close below the midpoint of this. So watch the midpoint of this. You don't want it to close below the midpoint here. Okay. Roughly around there. If we see displacement, if I see displacement on the lower time frames here, then to the upside from here, then I'll consider going long, but not until we do that, because this can go all the way down here still. From a retracement perspective, that is still a viable option. So we don't want to go long until we see that respected there. You can get tripped up on these lower time frames fairly easily if you don't see evidence of price coming back out, right? So now we see price heading back above. Okay. There we go. Seeing back up to a short-term bearish order block there. Traded down to a bullish order block there. I'm not seeing like major displacement off of this, but I mean, that was a reaction though, right? But I'm not convinced yet. It's not the right time. So we saw this fair value gap traded to and through. We saw a close beneath that halfway point here, so I'd mentioned be careful. If it closes below the midpoint, then there's a good chance that we head lower, so we did. That's why we don't go long when we see stuff like that. We're going to run for these relative equal lows next. So we need to see this move lower now. So I anticipate this is going to run for those mitigation, these relative equal lows down here. So I expect price to travel quickly down in this direction. Take out these stops is my next draw on liquidity. So we should see those liquidity areas drawn pretty quickly and taken out swiftly. Unless this gets bought up right here, I suppose. But those relative equal lows are a little too enticing, in my opinion. It's very possible it leaves it open and then just rips higher too. That's why I don't like trading in these conditions. But I would imagine it would want to go take out that easy liquidity below us. But if price is bullish, if price is tending to be bullish, then very well could head higher first. All right, so we're heading back to that mitigation block. Good. Quick little scalp there, 10 handles. Took that short down. We know that's reaching towards these areas next, right? So we need to watch and wait. Look at your lower time frames once it reaches these levels, right? These are on the 15-minute chart. Make sure I have my boxes accurate. So we took out that area of liquidity as expected. So do you kind of see how once we took out this short-term high, we had displacement lower, and these lower time frame buy side imbalances are eclipsed by higher medium term imbalances as well. This mitigation block, we did see an initial respect of that, but now we're seeing us trade into what would be considered equilibrium soon. We're not there yet, so I think we've got one more push at least getting into that space there. So I'm watching the lower time frames as we go down into this halfway point of this buy side imbalance. I know that that's equilibrium. You can keep your fib on the chart there. I know that's equilibrium, so I'm watching that very closely here on our lower time frame charts, right? I'm watching to see if there is a reaction, a breaker on the lower time frames, a low, high, lower, low, higher, high, something that tells me there's a reversal at that point in time. So, and you can kind of see how on the 4-hour chart, we haven't reached that core higher time frame mitigation yet, which happens to be near the midpoint of this 15-minute fair value gap. So right there. So this is the first point where I need to see, do we see a lower time frame breaker pattern? Do I see something that I recognize here? Do we see price continue to go lower? Is that possible? I haven't seen the move yet, but notice though, relative equal highs being built. High here being built. All of these on the 15-minute are now considered relative equal highs. So with that liquidity being left, and there being a new week opening gap, and these targets of mine staying up there, that's why I'm still cognizant of potential bullishness. But we are on a Friday, so do keep that in mind. So we traded down to that level. Okay. And I see a high here. Trading above this level so far. Low, high. This breaker needs to be up here. Let me at least go to a higher time frame. So I want to see if this turns into a breaker. Or not. I don't know yet. I don't, it doesn't seem like it's going to turn into a breaker, but we would need to see one more vicious pop lower down below that mitigation block. I want to see one more vicious move lower, maybe a wick down into this breaker, and then I want to see price displace above this up close candle here. Okay, so we're looking for price to head lower into the old breaker that I had drawn out earlier. I want to see this low get taken out. Low, high, lower, low, higher, high displacement, return to breaker, and then that's when I'll take my long. Give us a, hopefully you're having a fun time here. If you are, give us a like. I hope you're learning some stuff, enjoying enjoying the stream, seeing price get laid out. So we see, okay, so this is, and this doesn't have to come all the way back up here, by the way. I want to see it come down to this bullish breaker and buy side imbalance area. If we fail there, we have an up close candle up around here. The rest of this buy side imbalance to consider as well. But now this is what allows for a breaker to form. Key levels, multiple confluences, and we need to see how price reacts because we don't know if this can be a breaker yet. We don't know. Let me get rid of this as well. We don't know if price is willing to support this, but if it is, we now see that we've gone through one mitigation block, traded down to another mitigation block, and we need to see if price is willing to trend higher here. Remember, we're on a Friday. We've gone up a lot already. There's no imbalances on the 4-hour chart here on the way up. The only imbalance is this dynamic buy side imbalance here, which we are trading in currently. Okay. So here is going to be a really pivotal point. We're nearing 9 o'clock, 9:30. So I don't know if there's going to be a major move here, but don't be surprised if price completely ignores this structure here. Heads lower, takes out London lows, and then heads higher during 9:30 a.m. Now, I would like for us to see strong movement here. What is this high? 18,267.75. Let's make sure that's accurate. So here we're watching to wait and see if we get displacement higher now. If we do, and price is going to be taken lower, we may see price do a run up above these right before, and then maybe at 9:30 we run up to my levels that I was targeting for the day, and then we start a reversal pattern potentially, or maybe this fails and heads down, down into this fair value gap first, and this bullish breaker that we outlined way earlier. Low, high, lower, low. Sell side taken there. Displacement higher. Essentially, this low, high, lower, low, trade higher, failed to achieve that new week opening gap target, and now trading back down into this area here would be reasonable, right? I think that this would be reasonable. We have a combined down close candle within this range's discount. So I think that we can go lower. So we're no longer going to treat that up close candle as a breaker potential, but now we have another lower, low, high, lower, low, right? So we can treat this 1 minute candle, treating this candle as a potential low, high, lower, low, and then we'll see if we get a break above here. So we've now broken below this old mitigation block twice, right? We have not seen displacements to the upside yet, so I'm not taking a trade until I see that. And we've completely closed in this buy side imbalance, sell side inefficiency, and are now trading below that. So we're aiming for this discount area now, right? we're getting into, and we're past equilibrium from this short-term dealing. It's not even really a dealing range. Really, it's this range to this range that would be the dealing range. Because we didn't have, I mean, technically this is a trading range though, because we had energetic movement up in that direction. But you can kind of see how we have this low high, and then we have this breaker here from before. If we fail that breaker, what are we going to run for? Rejection block, short-term lows, relative equal lows. So you want to have each of these marked out on your charts as areas that could be traded to, right? Those are all sell side liquidity, and you have a whole bunch of short-term lows here. Very high resistance short-term lows, as well as the previous daily, that old daily volume imbalance, which we traded up above, right? You can see how prices started to become a little messier, but we're still pushing higher. So with that, we're keeping that in mind. It's almost time. Man, I have so much fun. I have so much fun with this. I wish I could trade with you all during like actual New York time. Okay, so now we've traded down into that breaker area. I have the ability, I do see some lower time frame up close candles, which potentially could be used. See this one here. I still like this one. I still like seeing us move above here if possible. So we've now reached that area, that zone, where we're now reaching down into potentially this buy side imbalance. If I see displacement above here, I think there's a shot. But I'm not taking anything until I see like big displacement, and there's a good chance you won't see it until 9:30 in the morning. Hey, Robert Mathers, how you doing? May sells, look at the bodies on the 1 minute beside the 15-minute imbalance, respecting the 15-minute 50% perfectly. For for now, and remember there were lower time frames, lower areas here, but this is a very large mitigation block here. People that went short here, we're breaking below that area now, so we're taking out longs that took this all the way long. So until we might see some consolidation here before 9:30 a.m. But yeah, I wouldn't be surprised if we traded even lower, because there's not really, like, we're within this range here, this energetic move. We're within this range technically, and we're in a premium. So sell side is oftentimes going to have the upper hand when we're in this high of a premium of a range, right? It's going to move a lot faster if we are bearish, right? So if you are bearish, then that was a really nice draw, a sell side draw. I probably could have held some runners for those lower time frames, but because we were in scalping mode, I did not want to risk very much more than our movement there. Okay, so we see sell side continue to dive into this buy side imbalance, sell side inefficiency. So you now have you now have a potential move down below this area if we do not see any further momentum show to the upside. So, which would be befitting of a Friday, right? I can see this being an original consolidation, first stage accumulation, second stage accumulation, terminus, and now we've reached first stage distribution, and we want to draw down towards this sell side there. I could see that being a potential draw. We have a huge group of opening range gap below us. We're at what, 18,260? Yes, we do. If we stay here. If we stay here. There's no guarantee we'll stay here, though. I need to get logged into my other computer. All right, so we see we're breaking through this. It's not like we're breaking through with any evidence of somebody coming in and jumping in and buying either, right? We haven't seen displacement, so there's no reason why we should be trying to go long early. This is still in a huge premium. So going long in a premium, very, very counterintuitive, but within this trading range, this is where I would expect to see, if we're going to see support, this is roughly where I would expect to see support. Otherwise, we're in for the ability for us to sell off and start to head towards those areas, because this can be treated as an area of consolidation where we've achieved. And if we are macro bearish, if you're macro bearish, like you think that this is a distribution stage on the way back down, then you're looking for a price to reject here and go no further higher, right? So let's see how this reacts within this buy side imbalance, within this down close candle in a trading range discount. Will the macro prevail and take us much lower? Possibly. What this is telling us on the 4-hour chart is that, hey, you just took out a buy side area of liquidity. Now look for any other outstanding areas of liquidity to be taken on the sell side, is what this is seemingly telling us, right? So we need to see if this begins to trade below this SIBI and then some, then there's a good chance it's going to run for these relative equal lows down here. So this is kind of why you don't want to be immediately going bullish on a lower time frame. Is you want to outline. We can see that this no longer prevails, so we can remove that for now. If this goes back up into this buy side imbalance, though, if we see movement higher, I guess I shouldn't have taken that off, because if we see movement higher in that space, then we can buy this buy side imbalance, knowing that it's likely to reach up for some of these relative equal highs that we see up here. Now, that's if and only if we see really large displacement, right? Hey, good morning, WEF. Looks like a market maker sell model on the 1 minute. Kind of. Yeah, we could definitely see, I could definitely see it continuing here, but we are in a discount of this trading range, and I want to keep my eyes out to see if there is displacement here, or if we just keep on selling off and targeting this low down there. So it does look like we're going to likely at least target this low. We saw that I want to make sure that this doesn't ping pong here, right? It didn't just go down to grab some more orders and it's going to completely reverse, right? Why can't we retrace back into the 5-minute SIBI before heading for those relative equal lows? Well, it retraced back into this buy-side imbalance. It immediately rebalanced lower, and it's actually heading for a lower 5-minute SIBI, it seemed. Why can't we retrace back into the 5-minute SIBI before heading for those relative equal lows? It probably is to some degree if you're looking at it on a lower time frame. But if this candle is going to support price heading higher, then we will see a retracement temporarily before we head lower. If this is going to just complete this second stage and just drop, then it's going to drop quickly and it's going to target these relative equal lows down here. So I want to see this break down below that short-term low. I want to see it do it with a lot of vigor, right? So a false move lower before heading higher is what I would be looking for if I wanted to see price head higher before 9:30 a.m., right? But we're on a premium. We're on Friday. So a couple things that you can look for. Rejection block here. As well to be considered. We'll take the higher of the two. This obviously this mitigated right here and it didn't do anything further. This is still a potential relative equal high. 15 seconds. Notice where the body of this closes. This is going to be key to see where this closes. Okay, so it closed just below that SIBI, right? So we, in fact, have already closed below that sell side imbalance. And I'm watching right now to see if we have an immediate rebalance to aim for that rejection block down there. I think we do. So let's see if this bounces up higher, if it heads down to that rejection block. I want to see it reverse, kind of treat this buy side imbalance and immediately rebalance lower. But we're starting to see a change in state of delivery here. All right, so we're starting to see a shift in change in state of delivery. I want to see if it goes above that previous, if we close above there, or if we just drop out precipitously. We want to see if we have movement above this high here on the 1 minute, that can be taken as a potential bullish breaker. But we need to see price trade above it though. That up close candle here. Let me get rid of this one here. You can see it clearer. Need to see it go above it though. So there's no guarantee it's going to do it, but if we do see displacement above that, then that would be an area of interest in my mind. It doesn't look like we're getting that. Looks like we're holding here pretty nicely. The bodies of these candles are what I'm watching right now on the 1 minute chart. I'm watching to see, hey, do we start to see candle closes higher here as we target movement down into this buy side imbalance, or are we seeing candles close lower and lower and lower, aiming for rejection block, wick consequent encroachment, short-term low, relative equal lows? So we're seeing some accumulation here occur. So far we're not seeing anything crazy to the upside. So well, let's see. Watch those mitigation levels as well. So now I would expect a return back to that breaker potentially. And I would not expect us to head down below, maybe down below the 1 minute, that 1 minute short-term low. I would not expect us to head back down below there. So I like that move there. I like that response. And if we can come back and touch this here, I think that I can take this, as long as we don't see an immediate reaction at this mitigation blocks. So right here, as long as I don't see an immediate reaction there, then I can probably take this long, targeting those relative equal highs. But I do think that we'll return back at least to this area here, or at least I would prefer if we did. Still not in the clear though. We're still at a heavy premium, right? There's no guarantee that we'll end up Let me check my mail real quick. There's no guarantee that we'll end up not just falling and completely dropping out, right? But I do like that as a slight shift in state of delivery. So let me see, what's this range here? 58, 61. I'll enter a long here if we get back down here in this account. If we can get back down to maybe this, that might have gone past. All right, well, let's see how this reacts here. All right, well, good thing I went long on a different account, but I was wanting to I wanted to go back down first. I was hoping it would go back down first, at least. WEF, if I'm in shorts from the top, do you recommend to close the trade inside that imbalance or wait for the lows to be taken? I mean, given this state of delivery, it's if this doesn't break down from here, then you'll probably return back to a previous down close candle, and that would be it, because it's going to, from my perspective, this can be considered a shift in the state of delivery, unless we start seeing it drop really, really heavily now. And it could still drop, but manage your trade accordingly, right? Make sure you're taking profit at key levels. And key logical levels at that. So 18,274 is what I'll be looking for next. I think price can head up into this this high, from this high to this low. The midpoint happens to be around 18,274. So I think that we can head up into that area and retrace at least. But we'll see. I have a few minutes left. I want to take off. I'm going to take off half of my position here once we reach back up to 1270, 270 rather. Actually, I do like the movement to 274, so I'm going to hold that for now. And unfortunately, I'm running out of time. Hey, Ralph William, good morning. I am running out of time to continue to live stream here. So I think a return back to the midpoint here is the first thing to watch. Then optimal trade entry, this sell side imbalance here. Second thing to watch, second target to watch, right? Third target, SIBI up here. And then if it runs past that, it's going to run for relative equal highs up here. If there's still bullishness, then it's going to continue running for those highs. Okay. So that's what I'll be looking for next. And where is it? Where's my other target? $18,345. Set a few take profit. I'm gonna set a few take profits before I go. And if this falls from here, that's totally fine. I'll get stopped out and so be it, right? But I would like to see it travel back up to equilibrium from this high to this low, if possible. But it might just, you know, might just drop here. We'll see. Anyways, I need to get going. I have a meeting in a minute, so I'll be here online, but I just won't be here in person. So trade safe today. Be careful, and watch out for that 10 a.m. news, okay? Take care, everybody. I'll be around. Drop in chat if you have any questions, okay? I'll try to stay around.